Good afternoon, everybody, and welcome to the weekly LendIt Fintech News Roundup. My name is Peter Renton, Chairman and Co-founder of LendIt Fintech. I'm joined by my good friend and colleague, Todd Anderson. How are you doing, Todd?
Good, Peter. How are you?
Doing great. Well, we have another busy week of fintech news. Shall we kick it off with Visa and Currency Cloud?
Yeah, I think so.
That was an interesting development that we found out this morning. Visa, they tried to get Plaid, they unfortunately for them, were nixed by the Justice Department here, and then they said, okay, we'll take the European equivalent of Plaid, and that's Tink, and they did, and they have pursuing that acquisition, and now we hear they're pursuing Currency Cloud, and Currency Cloud they're a pretty well-established fintech, and this deal is going to be £700 million, which is just under $1 billion. What are your thoughts, Todd?
Well, I mean, it's kind of a race between them and Mastercard to try to own all parts of the payment ecosystem.
Yep.
Currency Cloud is really focused on cross-border payments, and so it's just Visa's trying to put as much under the Visa name and umbrella as possible. It sounds like Currency Cloud might operate as Currency Cloud for the time being. At least when reading through the article and reading the quotes of the Currency Cloud CEO, it sounded like short term, like there's not going to be this huge overhaul where everything's going to be Visa, but I'm sure long term it will be. But
yep.
Yeah, I mean, it's smart play. Everything is, though. I wonder is when is the demarcation of this is anti-competitive? Because eventually, if they keep scooping up firms, eventually they're gonna get stopped by the Europeans.
They could, but Mastercard's doing acquisitions themselves. American Express is doing acquisitions. So, yeah, I mean, it's always possible. That's what happened with Visa and Plaid, the Europeans are usually a little bit more aggressive than the Americans on that, on these kinds of acquisitions. So we'll see. But right now, Visa is putting their stake in the ground, saying we want to be a fintech leader, and we're going to do it by buying companies. And clearly, they've already got great technology. They're a leader in their own right, but they've been aggressive in the fintech space for many years. They got the Visa Anywhere initiative. They have, really, they've been big supporters of ours and others in the space, and they really want to make sure they don't miss the boat. And for me, there's a bigger play here, or a bigger kind of thinking, I think, and that's as digital currencies come into being. There's, Visa, I think, are paranoid, rightly so, that in the long term, people might not want to, transact on the Visa rails as much as they are right now. And, you're talking, I think I read somewhere it was like $11 trillion globally of Visa transactions, or something like that. Anyway, it's many, many trillions of dollars goes across their rails. So if that ever starts to slow down, then they need to be able to have alternatives, and I think Currency Cloud is part of that thinking.
Well, is the only real competition to Visa Mastercard is really a blockchain-based system, and no one's created it yet that can rival Visa and Mastercard and use it as a similar payments mechanism as Mastercard and Visa use their rails for.
Yeah, but central bank digital currencies will not be operating on Visa rails, most likely. Of course, Visa may try and that's going to be a.
To me, it's all about where's the interoperability. How does that happen when blockchain infrastructure is a bit more normalized, and to me, that's the longer term question for a Visa and a Mastercard. How do they handle that? And I think the more acquisitions they scoop up, I'm sure eventually we're going to start seeing them scoop up these, a little more nascent blockchain-based companies and begin to better understand maybe how they can weave that tech and that infrastructure onto the Visa rails.
Yeah.
That's probably the eventual long-term game, but stuff like this is just a natural score for Visa.
Yeah, and I think the Visa rails right now is so dominant. I don't it's going to take the Visa will be around with their current their current kind of infrastructure for a long, long time, just because there's millions of
Yeah.
companies that are using it, and anything like that's going to take years, probably decades to change. But digital currencies are an existential threat to those rails, and I think they're trying to attack it from many angles. So,
Yep.
anyway,
Sure.
let's move on. I want to also shout out to OppFi that they went public via SPAC yesterday, and they are trading now on I think is it on the New York Stock Exchange or NASDAQ? I'm not completely sure. But anyway, they're still, when I look at my Google Finance thing, they're still trading under their old ticker, which is FGNA. That's the SPAC ticker, and they haven't updated that yet. But I think it's going to be New York Stock Exchange, and they, I'm a big fan of OppFi. I've got to tell you, they get a bad rap in some places. They're profitable. They provide a solid product. It's a high interest product, no question about it. But it is a product for those people who are who just don't qualify for near prime credit. So they provide a pathway for these people to really move up up in credit score, and they've got now a credit card they're offering, and I feel like they get a bad rap, but I always look at it as this: is the end customer better off overall by using their product? And I would argue with an OppFi's case that they are, and that's and the OppFi go out of their way to make sure that people have a good experience. They've got phenomenal ratings in a lot of the online ratings scores, and they people love their service. And you can, if you're in a pinch and you need to get $2,000 to get, I don't know, like your car is broken down and you can't drive it, and you really need to be able to drive it, and you've been rejected by other sources of credit, and you think, well, what the heck am I going to do? Am I going to have to go and pawn something, go to a payday lender, and you go in and you sign up for a loan at OppFi and you get approved, and you think, okay, that $2,000 is going to cost me, $200 a month for 18 months, and that's $33,600. It's a really high interest rate, but at the same time, you're out. You've resolved your problem, and I think that's what people really appreciate.
I mean, and if you look at the numbers, they're still pretty staggering. 150 million Americans, which is about 45% of the U.S. population, have less than $1,000 saved. So, while the riskier people do pay a bit more in terms of for credit, because ultimately they're a higher risk. There's obscene credit, like an overdraft, for example. And then there is, high interest credit, but that is within a spectrum of, okay, this is for a certain risk. And so there's always a balance. And, ultimately, I think, when there was talk of this, rate cap, I think there was lots of models run and studies done, like, lenders would be out of business. And so, you have to charge higher. I think OppFi does it in a responsible way in terms of this space versus some other players. And so I think it's a good signal for them. They are down a little bit today from yesterday, if you look at the stock price, but these things fluctuate over time.
Yeah, they're not. It's staying pretty reasonably steady. But I mean, the whole interest rate. If we have a national interest rate cap, I mean, even talk of that just makes me. And I think it was AOC that said that 15% is a national interest rate cap. It's fine in theory only, because if it's a 15% interest rate cap, suddenly you're going to find, I don't know, probably 85% of the country will not be able to receive credit.
Yeah, they're just gonna shut off. They're
They'll
not
shut it
gonna
off.
extend the credit. They're just gonna stop the faucet.
Yeah, and so that's what they don't realize. And so you can't mandate even a bank to lend money to.
That's what. So the next step is they're gonna start mandating that you extend credit. And so when does it come
Well,
off?
then it becomes a government program.
Exactly.
And we're a long way away from that. I mean, I don't think
I don't think we ever get
anyone
there.
serious is really going to go down that road. I mean, it just is. It really is ridiculous. And I think if you study the space, and there are a few people in Congress who understand the space, and if you really do that, then we're getting a little off track. But OppFi is, I'm a big fan of what they do, and I think they are a profitable company. They're not a sexy fintech where they're losing hundreds of millions of dollars a year, but they are steadily adding customers and making money. And
just listen to what you said. They're not a sexy fintech because they're not losing hundreds of millions of dollars a year.
That's
the place we're in.
That's where we are right now. You just go look at all of the companies that make the headlines. Not all, many of the companies that make the headlines, and most of them are losing money. Okay, Square is not losing money. And Square announced Square Checking. There was a lot of coverage on this earlier this week. It's no account. The Square Checking is it's really going to be it's a small business account, by the way. It's not a consumer account, and it's really, as it's I liked Ron Shevlin had a good piece on it. And it's like there's they really have they've got so many small business customers that are tiny businesses. Like I remember when Square Capital, I think the average loan size of Square Capital is $6,000. So you're talking, these are tiny businesses that are operated at a farmer's market or out of a tiny storefront, and they are still not well served by, certainly not served at all by the traditional banks. And so Square is they have 1.8 million small businesses that accept Square payments. That is a staggering number. And 1.2 million are potentially looking for a new banking relationship, and they already have a relationship with Square. So, there's certainly room for this bank account to be a huge success.
Yeah, I mean, Square is Square are one of the companies that are clearly going to be around for a long time.
Oh yeah,
they have their tentacles in many different places. I don't like the fact that they've made so much off the Bitcoin trading versus some of their other lines of business, but I think some of that was the craziness of the last year. So that'll kind of fade away a bit. But the most interesting part, I think Ron points out in the piece, was they're partnering with Sutton Bank, even though they have their own charter.
Right.
So that's a bit strange.
I got to think that's temporary. I mean,
I would think so too. But I thought that was a bit strange. But
they haven't had their own charter for very long, so
it
takes probably a while for them to build it out. But I can't imagine in 2 years' time that they're going to be still using a partner bank. Or
maybe they do it for a different reason. I don't know, and that's part of their model. I'm not sure, but overall, Square they're one of those companies that we're going to continue to talk about. Square, PayPal, a handful of others. Without a doubt, and one that is making money, that's generating tons of revenue, have many different facets to their business, and so they are the new financial services company.
Yep, and I was talking with Catherine Petralia from Cabbage earlier today, and we were just commenting how much better it is to be a small business today when you've got Cabbage has a checking account, Intuit has a checking account, Square has a checking account. And these are companies like these are fintech companies that are very well established, and they're offering things that small businesses want. And I think for a lot of banks, they don't really want the smallest of small businesses. They want businesses with 10, 20, 50 employees or more. And so a lot of these are sole traders. A lot of them are are tiny 1 or 2 person businesses, and Square's figured out how to make it work. And I think they're going to have, I can't imagine they're not going to be. Then I mean, it's going to take them, I think, very little time to sign up like 100,000 customers. I think, which most banks, unless you're one of the top 4 banks, 100,000 small business customers, that's a huge number for most banks.
Yeah, for sure.
Okie dokie. Moving on. Upgrade. I was emailing back and forth with Renault this week. He shared the news that Upgrade have launched a new credit card. They already have the Upgrade card, which is sort of a unique kind of combination of a credit card and a personal loan. And now they're doing a Bitcoin rewards card, and that is basically, you spend money, you get 1.5% back in Bitcoin rewards when it's not actually when you make the purchase. This is the thing about Upgrade that's different to other credit cards, is you don't actually get it when you make the purchase, you get it when you make the payment. So if you decide to buy a couch and put it on an Upgrade card and pay it off over 12 months, as you pay it off, you're getting your Bitcoin rewards every time you make a payment, which in many ways, is probably the way all rewards should work, because it would encourage more responsible behavior. But that's the way it works at Upgrade. And they've got it's I think a compelling offering for a good segment of the population.
Yeah. It's the one thing I didn't realize was, you had BlockFi, you have Gemini, but Upgrades is actually the first one that's like really largely in circulation. You can get it today. You can get Bitcoin rewards today through their partnership with NYDIG. And so, I thought that was, probably the most surprising part of it. I think you're going to see more credit cards with the Bitcoin or altcoin or Ethereum, whatever one they choose rewards. Bitcoin is most natural because it's the largest. And so, but yeah, that was the most surprising as well. There was more fanfare around the other two. This one is, you can get it, pretty much anyone can get it today.
Right. And that's the difference. I mean, it's only going to be temporary. I mean, I actually just got approved for my BlockFi Bitcoin rewards card yesterday. So, and I'm fairly high on the list. So they're working down. I think they had a couple 100,000 people on their list. So they're working down the list. I think with Upgrade, you don't get, like, Upgrade doesn't have the Bitcoin fanboys. Like BlockFi has the Bitcoin fanboys, and they are,
sure.
If they said to everybody, let's get going right now, they'll be inundated, and they'd have 100,000 credit cards they have to get out immediately, and that's probably not going to happen. Whereas Upgrade, and the thing about what Renault was saying was that, it's a great way if you've been thinking about getting into Bitcoin and you don't really want to risk any money. This is a great way to get into it and not risk any money. You're just going to get it as a reward, and then it's going to automatically dollar cost average as you spend. So you could end up if Bitcoin goes to, I think I saw Tim Draper say the other day, $250,000 is his guess by the end of next year. So that's a 10x, it's almost 10x where we are today. So you could actually get yourself a nice little nest egg just from your everyday spend. And so that's the appeal. And Upgrade is a very, very different customer base to BlockFi.
Oh yeah, for sure. I mean, that's probably night and day if you want to compare the two. But I think the overall, if you look at it, the biggest benefit of all is that more regular people are gonna play, or at least begin to dabble. Oh, what are these Bitcoin rewards? What does this mean? Is this the product that's right for me? And so I think it also increases awareness at the same time.
Yep, for sure.
Which is only good because it's coming in some way, shape, or form.
Sure is. Well, speaking of BlockFi, we actually need to talk about them separately, because they've been in the news this week, and not in a positive way. They received a cease and desist letter from the state of New Jersey, and they're based in New York. Well, I think they're based in New York anyway. They are.
I'm not sure where they're incorporated, but I mean,
They could be New York. It actually could even be New Jersey. I don't know. But they're basically saying that they need to stop accepting new customers in New Jersey beginning today, and so that's a blow. And also, I was just seeing on Twitter that they're also the Alabama. The state of Alabama is I don't know whether they are basically saying the same thing. They don't want any more new. I don't actually know. I really don't understand what they've got, what the problem is with these states. I mean, BlockFi's a pretty simple product. It's an interest-bearing product.
and as far as I know, the order is not very specific either. It was the acting AG's basically first order of business. It's only for new accounts of the product. They're still serving existing accounts. So I think we need to see what comes out in the coming weeks. I suspect more information will, but to me, I think it's all clouded in secrecy right now and vagueness. And a lot of people are essentially guessing.
Right.
But I mean, if you look at it, it's not, on the face of it, it's not good news for BlockFi.
No, it certainly isn't. It
also points to like the regulatory, and I know AG is not really a regulatory jurisdiction, but still there needs to be clarity. Like, stuff like this is going to continue to happen until there's real federal clarity, which then the states will begin to maybe make small adjustments after the fact. But there's still so much that's up in the air that they've been playing this game.
Yeah, it's a shame, really. I feel like it doesn't actually say the acting attorney general started the job on Monday. It doesn't say what his real problem is.
No, it doesn't.
And yeah, I don't get it. And I think, it's a pretty simple. I said, like,
is it maybe one of these things where it's like, all right, cease and desist on new accounts. Let us examine this. And then we'll give you conditional approval, and then it's like that's what it feels like, or it just feels like a bit of a power grab by a new AG.
Yeah, it could be. Who knows? There could be sure there's something behind the story there. That maybe there's someone with a connection somewhere there with the acting attorney general there in New Jersey, but and that Alabama.
Or Jersey's about to whack crypto over the head with something bad.
Yeah,
regulatory wise, and you're not going to be able to do anything in Jersey anymore.
Yeah.
That maybe that's what's coming next. I don't know.
I mean, as someone who wasn't born in this country, I just am sometimes just so
it's absurd
bamboozled by the system that is created here, where the states have so much power. In most, like in Australia, where I'm from, states don't have. There's no financial regulator in any state because it's it's all financial transactions are regulated nationally. That's the way it should be.
Make it so much easier and more seamless to operate.
Yeah, I agree. So anyway, Blend. Let's talk about Blend. They went public, right? After our news show last week, they went public on Friday and this was a traditional IPO with investment bankers involved. It was they raised $360 million. They had a $4 billion valuation. Although, if you look at the week thus far, it has not been a good first week for Blend. They've been down. They're down about 12% from where they went public at, and but they are just crushing it. Look at some of the stats that came out here. $5 billion in loans per day are processed through Blend's system. That's partly because Blend has many of the largest banks as clients. That's how they're doing, particularly under COVID, where banks suddenly realized, oh, look, you can't come into a bank and do a mortgage transaction anymore. We need to really have a digital path. We need it now. Blend has really benefited from that. And so they have a lot of big bank clients. So they're processing $5 billion in loans a day, 1.4 trillion in 2020. That's that is a huge amount of money.
Yeah, I think if you're looking at the statistics from the story that we're essentially talking about, 31 of the top 100 financial firms, 5 billion in loans per day.
Yeah.
They jumped their staff almost double, a little bit under double. And so, they're growing, and this is, if you're looking at one product that desperately needs digitization, it is owning a home and buying, going through the mortgage process. And so
Totally agree.
it's
Totally agree.
it's a natural thing, and to be honest with you, there's a ton of room in the mortgage space to get infinitely more efficient than where we are today. I mean, we've both been through refis recently. I know yours was through Better.
Yep.
I remember. Yeah, through Better, and was relatively easy. But there's so many people that don't even know a lot of these firms, which is why a blend is good, because it works with the banks. But there's just so much room to grow in the real estate space.
Yeah, and I've done 5 real estate transactions over the last 30 years, or last like 22 years, I guess. But I've been in America almost 30 years. But I have never had as smooth an experience as I had with Better. It was, I wouldn't say easy, because there's still documentation you have to do, but everything was electronic. It was great. I wrote about it a couple of weeks ago, but it's that's what Blend is providing, like the better.com experience for the traditional banks, because they know they need, if they're going to compete with Better, and Better had the best rates too. It was quite amazing. But if they're going to compete with companies like that, if they're not digital, they're screwed now. They can't really gain market share. So anyway, I want to end with Starling Bank, our good friends over there in the UK, with Anne Bowden. She's spoken many times at our event, and they just put out their results, and 600% jump in revenue, 8 months of profitability last year, and deposit base grew by 500%. I mean, this is really they seem to be crushing it. I mean, I feel like Revolut gets all the headlines in some ways because they got the valuation, and they're in a lot of different countries. Starling is still really focused on the UK, but they just Anne Bowden and her team continues to execute.
Yeah, and I think they had the benefit of they've had that one investor that was not as pressurized, I would think, as some of the VCs that invest in the space. So I think they had the benefit of working with the right partner.
Right.
It's funny, in reading through some of the stuff about Starling, I was listening, my recent podcast with Isusu, and he said it like 9 times towards the end. Make sure you're comfortable with who's giving you money.
Right.
Know who's giving you money. And he couldn't stress it enough, because a lot of these VCs, all they want to see is growth, because they need to make returns. They need to return those funds to LPs. And so it's, there's a lot of pressure. There's companies like Revolut that embrace the pressure. And then there's other companies, and this is just an assumption on Starling. I don't know their financials. I don't know any of that stuff. That they found the right partner who's allowed them to grow consistently and steadily, versus trying to grow like bandits and take the valuation and try to catch up to the valuation. Yep. They've been slow, steady, really great performing. Anne is a big fan of her. We love when she comes to speak, and I think Starling's been doing great things, and profitable fintech should be highlighted.
Yep. And they said she had a plan. She didn't really get caught up in the hype, and it's now they're now starting to differentiate themselves. I mean, here it says profitable every month since October of 2020, and their margins, their net earnings are increasing every month, and that's I think that's impressive. When you look at what digital bank in the UK right now is profitable. I can't think of another one.
Yeah.
And so, I think that's a really.
I mean, there's good signs for Revolut. Well, it was one of the FT articles I read about. Their investments are what are part of the big money losing. But their fundamentals are not bad. They just need to, not make as many big time investments, which cause them to lose money in short spurts. But yep.
Well, we are out of time, I'm afraid. That is all we have time for today. Thank you very much. I'm actually going to be off next week. I'm going on vacation to the wilds of Wyoming. Yellowstone. It's not really all that wild, Yellowstone, Grand Teton, but I will be out of cell phone range most likely for most of the week, and so
we have another a fresh LendIt face that's coming to the news screen for next week.
I can't wait to watch the rerun. That will be great. So do tune in again next week, 5 p.m. Eastern. We will be back then. Thanks for watching, everybody.
Thanks,
Bye.
everyone.